Good evening, YouTube. How are you doing? Today, a little bit Twitter updates from the people on X or Twitter. And also we will look into silver. Just take a 10 minutes to look at silver measured against the big stuff, measured against gold, debt, the Nasdaq, SPX, all that, just to see where we are with regarding to silver, because silver, broke the 26 like a half year ago. To me, that was the big go-go. But let's see how it performs against, other stuff, which is equally as important, just to get things rolling into silver. We're not quite there yet, I will say, but we will dive into it. But first and foremost, J Hinster, GDX, can we? Maybe. Uh, Weird breakout kind of thing here, this little running correction, huge collapse into that retest. Seeing some green candles, ideally we hold, yeah? So that would be a textbook wedge pattern breakout retest scenario, and then we will go higher from there if we're that lucky. PS, the gold to silver ratio could maybe, it might be a little bit too early, but again, some big moves to the downside potentially. The great Martis here with eyes on yields. So we will use the 10-year. Again, we have 1, 2, 3 here again. I think again we could actually go all the way down to here, completing the third impulse, lower lows, and then potentially go higher. There's also the another possibility. Again, if we this one will be a collapse, meaning overall economy, all that good stuff will have a really hard time, right? Bonds collapsing is never good. So just see what happens in 2020. We can't see it here. But again, overall, in the grand scheme of things, rates long term is higher highs and higher lows on the 10-year, the 20-year, all that good stuff. The 40-year bond market peaked in 2020, and during that period, you have lower highs and lower lows, meaning lower rates over a longer period of time. A lot of money easing, dilution, all that good stuff. But the wind has changed, and it is the opposite now. So, but again, like Mart is saying here, he's expecting the flag to break here and this go. I mean, very validly. But I think we will have the third one down, at least the third one down there. But yeah, longer term, 10-year out in the future, again, higher rates for sure, 100%. Here we have the silver squeeze setup. So again, you have the gold to silver ratio. This is rock bottom entries. It's go time for silver. And this is also what I've been looking at. You can see we have the main wedge pattern here, mega breakdown there. Miners rallied, huge retest, got back into the wedge, testing confirmed, couldn't quite break the upside. Trying again. Now we're actually, again, weekly charts here, but we could be on the verge of a successful retest, and then we're going higher. You can connect the lows from here to here and then up, then that's your trend line for the two false breakdowns, and then you can actually connect it there. So yeah, that's why I'm saying potentially we could be, 3 weeks ago, green candle, mega doji with a huge tail on top, and now we're actually seeing a red candle. A little bit early, but there are signs that, hey, just maybe. Also looking at, the GDX, the SILJ, all those has been done the retesting and could be going higher. To me, the key to the mining sector is the gold and silver ratio. Silver bar here, so GDX annually chart again, 1 year. I've never looked at, the GDX on a yearly candlestick time frame. Updated, will do one at the end of the year to close, of course. So what he is looking at is, can we have this yearly? I'm not used to say that. The yearly close above that 2011 high, 2020, 2022, and on the fourth here. 1, 2, 3, you usually break on the fourth. That would be massive to get a close. Where is the close? Like 40 maybe? So like $40 on the GDX, and you have a confirmed breakout, retest, resumption, yearly, body candle above the, I mean, that's good. We have 1 month still. So what else do we have? What else do we have here? Gold to silver, again, the same kind of of candle here. Again, we could be, at that point where we might have a successful retest of that breakdown there. So very interesting. Sven Henrik here. Again, this is the volume keeps shivering on shivering yeah, on the SPY. So uh, wedge pattern here going higher, volume declining. So you have some divergence there on the volume. Um, Quite impressively big divergence, by the way. Next big trade here on the NXE, increase in volume on the bounce of the 200 DMA, daily moving average. Here, the bounce, pop here, bullish wedge, bullish pennant, whatever you want to call it, bull flag here, volume is kicking in. Major higher highs and lower lows, higher highs and higher lows on the longer time frames, trending heavily on the weekly, excuse me, on the moving averages. Pretty cool. You can see NXE here is fighting previous all-time highs. So you have one here at roughly, let's call it like 8.8 or something. And you have it here again and again. That's the one to break. That is big resistance, but it looks decent for the next gen. The Happy Hawaiian here, $5 plus for copper and 50 for silver. So he's looking at the silver to copper ratio. I rarely look at it, to be honest, but again, you can see that we're somewhere in the middle of this, at least from what I can see here for the past 15 years. Silver broke this broadening structure and has momentum in favor of copper. Horizontal level across here at the ratio at like 7. So again, if we get to the short term here, silver will outperform, roughly 60-80% here in 2025, maybe even. So yeah, pretty cool. Last but not least, we have bar charts with Ethereum getting sent to its highest price since May. So yeah, big pivot high over here. We're getting there again. Look at that base, by the way. That is, again, the Trump win was basically a big go for crypto and risk on tech. It had this huge head and shoulders, and yeah, it has just been going from like 2006 to like 4K. So that is pretty high. 2,600, of course. So yeah, that is the Twitter stuff, and now to the silver brush up, you can say. Where are we on silver? We have like 15 charts here that we will look at on a weekly time frame, sometimes monthly. This is longer term views, and yeah, silver in itself broke $26 here back in March, excuse me, of 2024, and has been again long term. The long term bullish move is upon us here. Day to day, you know that even intra week, a lot of volatility back and forth, but the break of 26 is, in my opinion, the go to 50. We could probably see a large pullback there. Again, this would be the third touch at 50. And then we will break on the fourth. But again, the long-term picture for silver is up. But it's going to be frustrating as hell until we get that parabola move. Silver measured in world currency units, so a basket. So you can see here, same thing. That's why I'm pretty confident in that call with regarding to silver and 26, is that when we broke like 19 here on silver measured in a basket of currencies, that is it only goes back to like 2010, but that is a 10-year breakout, right? 14-year breakout. That means something. That means very often, almost, not always, but almost, you're seeing a move to the triangle high up there. So extremely bullish, when looking at silver in the entire world, basically. Here I have silver to gold ratio. So you have to invert it to get the silver to gold ratio. And that's the candle, like we talked about on the previous charts, but again, with a bullish bias because we want this to go up because we're looking at the silver to gold ratio. So yeah, one could argue that, again, fake out high here, test, couldn't hold all the way back to the other side of that formation, standard. Try it again, couldn't hold. And if we break here, we do actually have somewhat of an inverted head and shoulders, even though the neckline is extremely steep. But still, that could be, the way to go there for the ratio. We will find out, in, I think, 2025. If we start to see the moves here in 2025, silver could be the big one. Again, silver is a pain for like 95% of the time, but the last 5% is where it does all the gains. But other than that, the other remaining time, it's yikes. So silver divided by inflation, PS, the inflation that you're getting from your government, you can easily, multiply that by 2. That is closer to the real number. So, anywho, that's just a different topic overall. I want to show you here the 2011 price action, rally, mega surge, bear flag, tag, dang, ding, and bear market. So 0.11 here is a big, important horizontal level. And you can see here also in 2020, we tagged it twice. And when that gives in, we have broken the downtrend, that's cool. But when that major resistance in this ratio gives in at roughly 0.115 here, silver is ready to outperform heavily. It has already done it here. You can see we're breaking out, retesting, grinding it higher. But so yeah, long-term silver looks really good as an inflation hedge, especially when we take that one out, right? Beautiful. Deep handle, I know, but still, yeah, that's very promising. Silver against the SPX. So we normally, well, we want the silver to outperform the SPX because a lot of money is coming into the SPX, of course. And if we can have silver start to do a little bit of outperformance, some people might rotate some of that capital into silver. That is the main thesis, right? So major downtrend broken here from 2011. Weird price action here overall, but I will say if we can start to climb above, 0.0063 here, these highs, and this little weird channel there, then again, silver looks early, but definitely in the driving seat against the SPX. So right now we're not overperforming by any means. So it will need a little bit more time to potentially start the outperformance, but we're definitely not there just yet. And the same can be said for silver measured against the Nasdaq. Long-term downtrend here. We haven't really been breaking it. We have a channel here as well. So overall, we haven't made any major higher highs in this ratio. Therefore, the Nasdaq is clearly still doing better. When are we happy with this is basically the first view or the first good feeling for silver will be the break of that blue channel there, and also getting away from this whole downtrend kind of thing here with these highs there. So, so silver underperforming tech still, and that will be the case until proven otherwise. There is a case where actually we could see, a major double bottom kind of thing here. 2000s into 11, that's 22, so almost perfect symmetry as well. So yeah, the Nasdaq is still, somewhat of a better play, even though it hasn't been outperforming as much for the past 4 or 5 years, but still definitely somewhat with a downsloping bias to it there. Silver divided by the Dixie. It is just measured against a basket of currencies and or the Dixie, which is measured against the basket of currencies, and we have a major resistance here at 0.33. Same thing applies. Again, the highs, the bear market breakdown, the highs of 2020, and we are here. So we have this big one here, 2, 3, and then we can potentially go on the 4th. The overall downtrend is broken. And that's also why you have seen the Dixie has been insanely strong and still is. But actually, ever since that major break there in April of 2024, silver has done better, even though we have had a very strong dollar. Silver has actually been outperforming that. But it has been really hard, ever since basically Trump got elected October, November here. So, but silver has done better, and the downtrend is broken. Now we have the big ceiling, 0.33, and same thing applies right there, right? You have a lot of good stuff going on here. Big ceiling. When that gives in, I mean, there's no question in my book that that silver will outperform heavily at that point, even more heavily at that point in time, getting back to the highs up there. So M2 money supply divided by silver, silver divided by M2 money supply. I have to invert it because I have some issues with the other ratio pair, anyway. So yeah, 2011, huge supply and demand zone right there, support and resistance right here, between like 6 billion and, 580 and 6 billion. So that is basically where we need to get above, right? For this, I actually want to change this a bit here because this is not, I want to put it right there. There it is. So you can see, again, major 10-year basing pattern in the making. And that means once we get above, at that point in time, silver will outperform the M2 money supply. And remember, the M2 money supply is not going to come down, right? I mean, the M2 money supply is high now, but I think, over the next 5 years, it will be what we have seen in '08 and also here in COVID will be, you haven't seen anything yet at that point in time. And if we can get above, silver will outperform that. So that is amazing. Silver divided by M2, the median house pricing. Again, how that, MSPN is measured, I don't know, but and what it takes into account, I have no idea. But the overall housing markets, the median, and silver, 2011 highs taking out, breaking out, retesting, flagging a little bit here. Cool. Resistance across the board here. But overall, the downtrend is broken. The retest has been done here. 30 weekly is coming up nicely there. You can see the breakout, the retest, and now we're trying to get higher. So overall, this is the monthly. Silver has broken out, and now it's just trying to gain that momentum. Also, look at this little beautiful bottoming structure right there. So that's pretty nice. Big resistance, however, at roughly up here, right? We have 1980, 2011, and if we get there, we will see a huge pushback potentially, and then we will actually go again. And that's the big money maker, right? When you break that 50-year trend line at that point in time, where housing has been a better play overall, but that will change once we get there, if we get there, of course. Silver divided by BAC, Bank of America. Bank of America, ever since the peak in silver in 2011, Bank of America has been doing better, right? Lower highs, flat bottom here, and so basically right now still Bank of America is a better play. We are getting some vibes here of a little bull flag. So if we can pop that and break this 8-year resistance, then silver will be in the driving seats for this ratio, meaning the banking sector in general should be weaker than silver over the longer term. What do we have here? Silver divided by debt. Now this is one that I have issues with. Didn't I say that? No, we will skip it. We will skip that. So yeah, here we have the PPI divided by silver. Early vibes of breaking down here. We are getting back in a little bit here, so this might be a false breakdown, but overall, hopefully we can break this to the downside. We have to invert this to get the silver first. So silver is breaking out here, getting a little bit back in, but yeah, let's see how it is. I mean, the PPI has still made major higher highs there, so we're trying to break it here. We have 1, we have 2, 3. We might need a little detour and then go again, but overall the trend here is up for now. So but we haven't made the big 15-year breakout just yet. You can see here breaking down, hitting it a few times, can't really do it. So we could see a false breakout here with a confirmed backtest from the inside, and then you can see if we add a trend line there, you can see it's getting pinched here. So yeah, not quite there yet for this ratio where silver will outperform the PPI. Not quite yet. Then we have the SILJ, the juniors divided by silver. Again, this ratio needs to go up in order to the SILJ really to do anything major. And again, it looks quite heavy here. The SIL looks way better, but the juniors, you can see we have been breaking down here, playing around that major trend line, back and forth, back and forth. The bullish view comes at 0.43, so we're quite a long way from that, and we do have a trend line coming down all the way here, which we had a little bit of a peak above here. So yeah, so the juniors is still not doing anything major against the silver price. Um, but when and if it clears here, we will have a quick pop for sure. But right now, nope. So a little bit of a mixed bag, you can say. If we, again, I do this on gold as well, on the Substack. Gold looks, if I remember correctly, has broken out against everything except the Nasdaq and SPX, where silver is lagging heavily. Like you also see in the ratio, so the gold to silver ratio, but also in general, right? Silver is only at like 30, and gold is way above its previous all-time highs. So silver is lagging heavily here, and also when you measure it against different stuff, it's still a little bit weak. So there it is, guys. That's all for you guys. The Twitter stuff, but also a little bit of a dive into silver. You know where you can follow me on X, uselink INV, Substack for more details, uselink INV, and YouTube, of course. I will do some videos here and there. So have a great and amazing day, guys. And yeah, any questions, comments, all that good stuff, I will happily answer if you have anything. Also, critique is very much welcome. So have a great day, guys. Cheers.